Welcome to week 5 of e-learning. Last week we looked at tax return forms and tax return tables. This week we're going to spend more time on the actual form and what it looks like. I'm having you look at presidential candidate tax returns. I do it because I think it's kind of interesting. It's not required for the presidential or someone running for an election to have their tax return public, but it's encouraged. So they're out there. Anybody can pull them up online. I've chosen 5 different people that I want, and you have a choice of picking one of the 5 and looking at their returns. I picked these 5 for a particular reason. One, they're more current because the tax forms have changed over time. 2, they're all easy to read. Sometimes when they make copies, they're kind of blurry. And 3, they are easier for you to interpret. They don't have as many pages. Some of these can have, 100 pages with them. So that's why I chose these 5. You're going to be able to choose one of them, and you're going to analyze it, complete a worksheet, and then take a quiz based on that worksheet that you completed. So I want to go over what it is that you're going to be looking at to give you some idea. Now, keep in mind, the tax forms have changed during the last 3 years. So the ones that you're going to look at are all from 2015, except for Bernie Sanders. His is a current tax return. So the current ones are a little bit different, and I'll show you what a current one looks like. But I'm going to look at the ones prior to 2016, 2017 when they changed it, because that's what most of them are going to look like. So to begin with, all the tax returns have your name or your spouse's name here. You put your social security numbers here. Of course, they're all blacked out because that should be private information. The filing status goes here. So this should look familiar to you. Single, married, filing jointly, married, filing separately, head of household, and a qualifying widower with a dependent child. So these are the choices that you can file. And if you remember correctly, married filing jointly would give you the less tax. You'll get kind of a tax break for married filing jointly. One thing that students, when they're filling out the worksheet, they have difficulty finding this right here. This is the presidential election campaign. If you want, they'll take $3 of your tax money and put it toward the presidential election campaign. So if it's marked here, it means that they're doing that. If it's not, they're not doing it. So it's not like they're taking any money from you. They're just taking it right off the taxes that you owe. Exemptions are something that are no longer on the new tax returns. An exemption, you get an exemption for yourself, you get one for your spouse, and then you get them for your dependents. So you would list if you have children, you would list your dependents here. You have to have social security numbers for them, and you put your relationship to you. And if they're under age 17, and to be honest with you, I'm not sure if that's still true or not, but before 2016, 2017, you would get a tax credit for children that are under age 17. So in this particular case, Elizabeth Warren, she had herself, her spouse, so she has 2 exemptions here. This is the number of exemptions. Line 7 would be wages, salaries, and tips. Remember, this is from your W-2 form. This is from box 1 on your W-2 form. You take it right off of that form and you put it here. So Elizabeth Warren and her husband combined, had $536,809. Okay? Taxable interest. Now you're going to notice there's these things called schedules. There's a Schedule B, there's a Schedule C, Schedule D, Schedule E, Schedule F. There's all these schedules. And what the schedules are is they're kind of like worksheets. So you do all the work on the worksheet and then you put the actual numbers here on the main page. So when you're pulling up the presidential tax returns, the first pages will look like this. And then there'll be pages, like sometimes 50 pages of different schedules that will come after their tax returns. Okay, so that's what a schedule is, and we'll look at some of the more common schedules. Of course, I'm not going to get into, I'm not an accountant, so I'm not getting into all that, and you don't need to know that neither. But you need to know what some of the main schedules look like. So the first schedule is Schedule B, and you will use that when we do the project next week. So a Schedule B is for interest and dividends. And let me pull one up here for you. Schedule B looks like this, and it hasn't changed much. Okay, the top part is interest. Remember, interest is money you get like from a savings account or bank accounts, that type of thing. Dividends are from your stocks. So this would be the interest from your bank accounts, your savings accounts, your money market accounts. This would be your dividends. Actually, money markets would go down here because money markets pay dividends. But you would list the different banks that you got the interest from, the amount from each of them, and then total it up. And then you would do the same thing here with your dividends. And remember, a dividend is when a stock, shares, or a company, if you're an owner of a stock and the company shares the profit with the shareholders, they give dividends. And of course, dividends are taxable. You have to pay taxes on that. So that's what this is. So you would complete this worksheet, then you total it up, and then those numbers then go under taxable interest. So Elizabeth Warren had $5,020 in taxable interest. Now there's some interest that's tax exempt. So like a municipal bonds pay tax exempt interest. You don't have to pay interest on them. Ordinary dividends, those are like from your stocks. So those amounts will go here, and you're getting them off that worksheet, the Schedule B worksheet. Okay, some of these we're not going to get into. I'm going to go over the main lines here. Alimony, if you're divorced and your spouse has to pay you income, that's what alimony is. Business income is Schedule C. Now that's another one that you're going to see when you're looking at some of the presidential tax returns. And Schedule C looks like this. Pull it out here. Okay. It's profit and loss from a business. So you would put your business here. And if you notice, if you have a business, you can take away, you have the income that you bring in, and then you can take away some of your expenses like advertising, car expenses, commission, mortgage interest, legal fees, things like that. So that's the schedule for that. You would complete this schedule, or your accountant would complete this schedule. You come up with a number, and then that goes on the first page of your tax return. And that's where Schedule C is. So you can see Elizabeth Warren has $217,917 in business income. And a lot of these candidates, presidential candidates, their business income is from speaking engagements and that type of a thing. So you might see that. A capital gain, or Schedule D, is when you sell something. Now, when you see this, a negative $3,000, that means that they have some kind of a carryover loss. So if you make money on selling an investment, you have to pay taxes on the total amount of your gain. However, if you lose money on it, the most you can take off each year is $3,000, and then you can carry over the losses for so many other years. But when you see this, that means she probably had more than a $3,000 loss on something. But the maximum that she can take is $3,000. And the Schedule D looks like, let's see if I can find the Schedule D, looks like this. Okay. And it's nothing that you're gonna have to do. I'm not sure I could do this. But you'll see these, so I just want you to be aware of what they look like. All right. There's some other things, other gain and losses, IRA distributions or pensions and annuities. If you're old enough to take an IRA distribution or have a pension or annuity, sometimes part of it's taxed, so you have to put that income here. So you would put the income here and the taxable amount goes here and you might be taxed on it. Rental, real estate, royalties, and partnerships, that's your Schedule E. And the Schedule E looks like something. Here it is. I have a lot of papers here. Schedule E looks like this. Schedule E is supplemental income and loss. Okay, it's for real estate, royalties, partnerships. So if you have rental properties, see rents received or royalties received. These are the expenses that you have for your rental properties. You can write them off. This gets complicated also, but some of our presidential candidates will have this form, so that's something to look at. All right? So you would do all the work on that worksheet, and then when you come up with a final number, it would go here on line 17 on the old form. Farm income, it has its own schedule. If you get unemployment, sometimes you have to pay taxes on that. Some Social Security benefits, if you're retired and you're collecting Social Security benefits, sometimes they're taxable. Okay, there's worksheets for it to determine that. You're going to add up all these amounts that it tells you. Add up lines 7 through 21, and that's your total income. So that's one of the numbers that on my worksheet and on the quiz, it's going to ask you to find. So Elizabeth Warden, she had $536,000 in wages and salaries. I think she's a professor at Harvard, I believe. But then she also had this other income that totaled up now to a total of $762,000. Adjusted gross income. Now on the new tax return, it's a little different, but adjusted gross are amounts that you can take right off of your income that you don't have to pay taxes on. So you can see educator expenses. As a teacher, I can take off $250 for that. If you have health savings accounts, moving expenses, you know, there's a form for that. All these things have forms you have to fill out. So it's not like you can take off everything, every expense that you had for moving. There's a form you have to fill out. If you have self-employment taxes, these are like an IRA for self-employed people. If you're self-employed and you have health insurance deductions, you can deduct it here. Alimony, if you paid alimony, you can take it off here. IRA deductions, if you contribute to an individual retirement account, which you guys can do once you start a job, you can take it off of your taxable income. Student loan interest deduction, here. Tuition and fees. These have little forms for them, so it's not like you can take off dollar for dollar, but all this goes here. And when you add these up and then you subtract them, you get your adjusted gross income. And that's an important number, adjusted gross income. Okay? So why she made $762,000, she's only going to be taxed at this point on $716,000 because she had these adjustments to it. All right, the second page on the old tax return looks like this. The adjusted gross income goes at the top again. You get special deductions if you were born before 52, and if you're blind, that's here somewhere. Oh yeah, blind. So you can get special deductions for that if you have that. Itemized deductions. Now this has changed since these tax returns. A standard deduction, so back before 2016, 2017, the standard deduction for anybody, if you were single, was $6,300. If you're married, filing jointly, or a qualifying widow, it was $12,600, and head of household was $9,300. And what that means is you can take that amount right off of your adjusted gross income. So then that's like you don't pay taxes on it. Now you can do the standard deduction, or you can do itemized deductions, whichever's more. And itemized deductions look like this. Okay. Now things have changed a little bit. So the average person, might not get to itemize as much as they could in the past. But itemized deductions have 1, 2, 3, 4, 5 categories, 5 main categories. Okay, medical and dental expenses. You're going to be filling this out when you do your tax return next week. There's a formula here that you have to determine. So like, let's say I have $10,000 in medical expenses. I can't just write them all off. It's a percent of my adjusted gross income. And if that isn't above that number, then I can't write it off. All right, well, we'll worry about that next week when we work on that. You can take off itemize some of your local taxes, your real estate taxes, your property taxes here. Okay, so you get a total amount of taxes, your real estate or property taxes. All right, interest paid, home mortgage interest. So if you have a large mortgage and a large interest amount, you might be able to itemize with that. So you can take that off also. And gifts to charities. You can itemize that. Now, if these add up to less than the standard deduction, you're not going to use this because the standard deduction is more. But if these are more than the standard deduction, then you would use the Schedule A. Okay? All right. So it looks like Elizabeth Warden. I didn't print off her Schedule A, but it looks like she has quite a bit in itemized deductions. Most of it's probably from real estate, taxes, and interest, and maybe some charities too. I don't know, but that's definitely more than the $12,600 standard deduction. So she subtracts that. Now her tax. Let's see here. What with that? That gives her this amount right here now. So you can see her income keeps decreasing, the amount that she has to be taxed on. Now, exemptions. This no longer exists. But remember back where on the front page where it talked about exemptions, you used to get, well, back in 2019, 2016, the standard, the exemption was $4,050 per person. So for each person, you would multiply it by 4,050. Now, if you make over a certain amount of money, then you can't use those. But this no longer, you can't do this anymore. But you will see this on the tax returns that you'll be looking at. Okay, now we get the taxable income. Okay, so that's the income. Even though she made $700 and some $1,000, she only has to pay tax on the $625,000 because she had adjustments and she had deductions that she could take off. Right? Now, this amount is her tax. And remember last week you figured out using tax tables what the tax would be. And that's where this comes from a tax table. Right? And there's a lot of complicated things here. There's credits, child care credits. This has all changed over the last couple years. Education credits. So if you go to school, there's a form you can fill out. And you might be able to deduct right off your taxes. Now remember, this is what she owes in taxes. Okay, so right now, since that's a large amount of money, you want to try to lower that a little bit. And you can lower it by some credits. So child care credit, these are all different kinds of credits there. Other taxes. So, and then, let's see here, other taxes. So she was self-employed, so she had to pay self-employed taxes. That goes here. And all her total tax, so her total tax ended up being this amount of money. So this is what she has to pay in taxes. Now, off her W-2 form, box 2, her federal income tax withheld was $115,740. Now, that doesn't cover this. So fortunately, she's been making estimated tax payments. So this is where you can get in troubles. If she wasn't making estimated tax payments, you can see she's off quite a bit of money here, about $80,000 or more, that she didn't calculate correctly. So she could actually pay a penalty had she not been smart and made estimated tax payments throughout the year. So this was taken out of her paychecks. She made an additional $130,000 in estimated tax payments. And we come down here, and this is her total payments. She paid that much in her taxes. And when you subtract what she paid and what she owed, she actually ended up overpaying by $41,000. Okay. Now, if she, and so then she would get a refund. Now, if this was the opposite, if these numbers were switched and she still owed money, then that would go here. But she gets a refund of $41,000. And then you can see down here, this is who actually did the tax return. And then you put your occupations here. So this is what the older tax forms look like. We looked at the schedules, itemized deductions. We looked at Schedule E. This is current one. So hold on, let me organize this here so we can look at a new tax return and see how it's a little bit different. Now, when you do the tax project next week, you're going to be using the new tax form. So the new tax forms look like this. There are 2 pages, front and back, again. And back, a couple years ago, you actually had a couple choices. You could do a 1040, 1040 EZ. There was like 3 or 4 choices that you could do depending on how much income you made and how complicated it was. Now there's just one form. It's 1040 for everybody. You can see this filing status is up here now. You put your name here and your address, Social Security numbers. Here's that presidential election campaign that if you want to contribute to it, you can. Standard deduction goes here. So if someone can claim you, like if you guys are working, you guys are dependent, okay? So you would have to mark that off. Let's see what else here. You get a deduction also if you were born before 1955, if your spouse was born before 1955, or if you're blind. You still put your dependents here, Social Security numbers. This child tax credits and that, there's forms for that now. And to be honest with you, I don't have children. I'm not up to how to do those. But once you get kids, you're going to have to learn how to do those forms because you get a credit for that. So here, right, line 1 now is your wages, salaries, and tips. So that goes right off of box 1 on your W-2 form. Here's your interest and dividends, okay? There's schedules that you do for that. If you get an IRA distribution, this is if you have like a retirement account and you're old enough to take money out of it, or a pension annuity goes here. Social Security benefits go here. Remember the capital gains, Schedule D, that income goes here. You have to fill out that schedule though for it. Now they have something different now called Schedules 1, 2, and 3. And we're going to be using some of those. Just kind of briefly show you what they look like. This is Schedule 1. So Schedule 1 now is where your adjustments to incomes are. Educator expenses. So I can take $250 off, and for me, and then another $250 off for my husband since he's an educator. There's just certain things, moving expenses. Now it's just for if you're in the armed services. But you can see these are where the adjustments are. Student loan interest deductions here. If you have an IRA, you could do it here. And then there's tuition and fees you can take off, but you have to fill out a form first. So this is where your adjustments are here. And then this is for additional income, like your Schedule C, your Schedule E, your Schedule F. So basically what they did, they took these parts out of the old tax return and just made them into a separate schedule. These used to be on page 1 of the tax return. Schedule 3, Schedule 2 was something that we don't really need to use. Schedule 3 has credits. So if you have, I just pull this because there's the credit for child dependent care. You would have to do this form. So if you have daycare for your child, you can get a credit for that here. And then also, well, this is something you guys might want to use in the future, is education credits. So these are different things. They all have their own forms that you have to complete. And then when you get the number, you put them over here. Okay, some of this stuff can get a little confusing. I also pulled this form. This is the additional child tax credit. You can get credit for children, but you have to fill out this whole form. And like I said, I haven't done this particular form because I don't have children at home anymore. And we're not going to do it in class. When we do our tax returns in class, we're not going to have any children to make it easy. Okay? All right. So if you come down here, you can see there's a line for total income. You add things together, you get your total income. You get your adjustments from that schedule I showed you. You do all the work in that schedule, you put the amount here. That gives you your adjusted gross income. These are all important words. The standard deduction now is different. The standard deduction has increased a lot. So now, if you're single, it's up to $12,200. And if you're married filing jointly, it's $24,400. So these amounts are quite a bit more than they used to be. So more people aren't able to itemize because this is normally, for most of us, more than if we itemized using that Schedule A. Remember, Schedule A has your medical expenses, your mortgage interest, real estate taxes, and other type of taxes, and gifts to charity, that kind of thing. Okay? And it tells you, you got to add, you just follow and you do what it says, add lines, and then you get up with your taxable income here. So on the second page, once you have your taxable income, you can use a tax table to find your tax. Okay. And then you have credits. So like child care credit, you can get there. There's just different kinds of credit. There's a child tax credit. That's something totally different now. We don't have exemptions. So it used to be you would get $4,000 per person credit, but now that's no longer there. So things are a little bit different here. Then you have your total taxes was up here again. You take the credits off of that and you get your total payments. Okay, so this is a little bit different, but this is the form that you're going to use next week when we do our own tax return. All right, so that's basically what the tax returns look like. So this week you're going to be looking at presidential candidate returns and just kind of going through them just to kind of get an idea of the different things that people actually have income on and where they go on the different schedules. So if you have any questions as you're looking at the tax returns, make sure you text me or send me an email and I'll be happy to help you. Just remember, when you do the quiz, you're only going to do one quiz. There's 5 quizzes this week, but you're only going to pick the quiz that goes with a particular person whose tax return you looked at. And when you do the quiz, make sure that you follow the directions. Do not put dollar signs in, and you need to put commas in where they belong. So for example, if the number is 2050, you need to put a comma here, because if you don't, it's going to make it wrong. It's something I can go back and fix, but it just makes it more difficult. So make sure that you read the directions carefully. All right? Happy 5th week of e-learning, and I look forward to working with you this week. Have a good week.